Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. Folks, we got lots to get into because we're seeing some very interesting action here on the charts. So first up, Ted Pillows on X highlighted that the Bitcoin 3-day MACD, so this is a 3-day chart, has crossed, the bullish cross has happened. This is very good, and this will lead into, of course, the weekly chart, which yesterday I was highlighting to you guys. The weekly, the bears are losing momentum on that weekly MACD. Ted says this marked the bottom and reversal in April 2025. Will it happen again? Now we know markets are cyclical, so I absolutely believe this is going to happen again because you're seeing the cross, but we're going to have to give it time. We were talking about in yesterday's podcast that we're going to have to let this play out. Maybe till later in January, we're going to start to see some strong price movements, and that will lead into February. The big question is, will it be a relief rally, simply a relief rally, or the bull market continuation? I am leaning more towards the bull market continuation, with Bitcoin hitting new all-time highs and altcoins following. And this is based on the macro. And a big signal we've been seeing, of course, is gold and silver have been ripping, and silver has been breaking all-time highs like every week. And these assets are indicating to us that the macro bull market for all assets is not over. This is something I've been telling you guys for years now, right? Since the beginning of 2023, that we are in a macro bull market. These asset classes are following global liquidity as the debasement of currency is happening across the globe. And we are seeing rotation between them, from precious metals to the stock market to crypto. Even real estate has been hitting new all-time highs. So they all have their turn, and we see new all-time highs being hit. Now, the other factor is that the stock market is still looking strong. The S&P 500 and Nasdaq, their charts are also looking good. So you got this combination of factors here, which is why I'm leaning more towards the probability being that this bull market's not over. Here's another example of that: is the Bitcoin bottom officially in? This was tweeted out by Bitcoin News on X. They said the Bitcoin slash gold RSI is currently testing a historic purple downtrend. This has happened only 4 times before, each marking the absolute cycle low for Bitcoin. This includes 2011, 2015, 2018, and 2022. Each touch point confirmed a higher low on the Bitcoin slash gold pair. The 2025 low is now being tested. History suggests a major reversal could be looming. So again, you have these chart patterns, you get the macro, you get these other asset classes still showing strength. So that's why, folks, I am leaning more towards, again, the thesis that the higher probability is going to play out, that this is going to go to a new all-time high. Now, I could be wrong, right? I don't have a crystal ball. I'm just using the data and what I'm seeing here, and a lot of the fundamentals and the macro information to form my thesis. So I'm not guessing. I'm using those factors as we've been discussing. So we're going to have to be patient to see how this all plays out. Now, here's what analyst Coins Kid had to say regarding the rotation of liquidity to these different asset classes. And by the way, you should check out his channel. He has a great channel doing a lot of great analysis. And many of you know I listen to a variety of people, not just one, because no one person is right all the time. He says, we have been tracking global liquidity in the crystal ball. That's his indicator. That's what they call it. All year. In October, I was looking at a pullback for crypto and then a big run for Bitcoin and altcoins to go into the crystal ball liquidity. We got the pullback, but not the follow through. So this is where on the chart you're seeing Bitcoin deviate from global liquidity, even though global liquidity continues to rise. He says, I did think into the year end we would see the push in Bitcoin, XRP, and altcoins, but the liquidity shot into the stock market and metals. I think we have to be patient for the rotation here, and I'm patiently waiting for the clues with you. So again, you have things on the table that are screaming bull market, but yet there are some bearish signals on the charts. And that's the big debate that's happening on X and amongst different analysts and YouTubers and much more. And like I said, I could be wrong, guys. And I'm just sharing my thesis, and you may agree with it, you may not, and that's fine. But I don't think anyone can definitively say we are still in a bull market or that the bull market has stopped and we are now in a bear market, right? Because certain support levels are not broken, and you have these two conflicting data points, and it's a big debate right now. So it's kind of like what Coins Kid is saying here, we wait and be patient to see what the market will show us. Again, I'm leaning more towards the probability of the bull market continuing based on these macro factors. And I think come late January into February, we might get some of those answers. And, I think once Bitcoin starts rallying, you will see people who are highlighting the bear market saying, hey, this is just a relief rally. It's just a dead cat bounce or whatever you call it, right? While the perma bull people will say, hey, this is the continuation of the bull market, but we don't know that yet, right? We don't know which one's going to play out. So this is where patience is the key. And here's another example that's on our side here, on the bullish side at least. Long-term holders sold just 2,700 Bitcoin yesterday, the lowest daily amount recorded so far in 2025. So what we're seeing is that the sellers are becoming exhausted, right? There's only so much they can sell as the market's going to keep getting weaker and much more. And one of the things I've been highlighting to you guys is that on-chain data from Sentiment shows that whales have started to slowly accumulate. They're not rapidly accumulating, but slowly, but they're not distributing anymore. So the selling is cooling off, right? And these are cyclical things, right? We know that in pumps, in rallies, they don't go up forever, right? There's buyers become exhausted as well. There's just, it hits those sentiment levels, and the market has to reset and go the opposite way. And this is how the market makers and the whales play the market. So again, we're seeing sellers getting exhausted here, which is a very good sign. So we could see long start to open up again and people getting ready for the market to go the opposite direction, especially as we are still in extreme fear. So when you have these things in place, the market usually does the opposite. And the same thing applies, again, when we are pumping and everybody's euphoric and greedy, the market gets ready to do the opposite, right? Because markets are cyclical. And once you understand that, it really helps you to navigate markets and to help you to be patient as well. Now, I'm not saying it's easy. I'm not saying it's not painful to watch your portfolio go down, as we go through these cyclical patterns, and some of them can be brutal, right? Big shakeouts, right? Just look at what happened in October. We had the largest leverage flush out in the history of the market, but this is the nature of markets, and obviously crypto still relatively young to the other asset classes, and you're going to see a lot more volatility. But guys, metals are leading the case here, gold and silver, and we've seen throughout this bull market over the past 2 years, as gold rallies, cools off, Bitcoin rallies, and vice versa, right? So the stock market is also looking very strong, and let's see how things play out. It's going to be a very interesting Q1 of 2026, that's for sure. And you got crypto market structure and all the macro factors with central banks and much more. Folks, this episode is brought to you by Trezor. They make beautiful hardware wallets that make it easy for you to safely custody your crypto assets. And folks, I'm a big believer in self-custody. I've been preaching about it for years. I personally self-custody the majority of my assets, and I've been a user of the Trezor device for a long time. And, Trezor, they were the ones who created hardware wallets. They were the pioneers, folks. They started this in 2013. They created the hardware wallets. They created the seed phrase setup. So they know what they're doing. And, their hardware wallets support all the major crypto assets like Bitcoin, Ethereum, XRP, Solana, Cardano, Dogecoin, you name it, folks, all the latest and greatest. And they have a great software suite called Trezor Suite, which helps you to manage all this. You can even buy, sell, and swap within this software platform. And Trezor's latest device, the Trezor Safe 7, it is quantum ready, it is waterproof, and much more. All the top of the line security features and hardware and much more. And folks, they have a hand-holding service as well. So if this is all new to you, you can talk to a Trezor rep to walk you through the setup of the device. Don't worry, they don't ask you for your private keys. And folks, their hardware wallets are also open source. The code is out there. That's how much they trust what they built. So it's pretty amazing that what they've built. And they have a holiday sale going on right now, where if you use the code holiday25, you can get up to 30% off on their products, guys. So check it out. Great discounts. Get the devices and their services and these things at a discount, and start self-custodying and protecting your assets, because we've seen exchanges and wallets and much more can get hacked. But with this type of self-custody setup, it's the safest way to custody your crypto assets. And folks, like I said, I'm a user of the device. I use the Trezor Safe 5 and 7. So if you want to learn more about Trezor, check out the link in the description, and of course, check out the sale they have going on. It's a great one. Okay, moving forward, Coinbase says three areas will dominate the crypto market in 2026. It's Coinbase giving some predictions here. Coinbase Institutional argues that the crypto market's behavior is being reshaped by structural forces rather than traditional boom and bust cycles. So they're essentially saying, the 4-year cycle is being disrupted by institutional investors who are buying incredible amounts of the assets and, of course, using the technology. The firm highlights several fast-moving growing areas where activity is accelerating despite tighter financial conditions. Coinbase believes these shifts could redefine how crypto markets function in 2026 and beyond. So the report, written by Global Head of Research David Duong and Research Associate Colin Basco, argues that familiar crypto cycle models built around retail speculation, token launches, and protocol-specific catalysts are becoming less reliable as institutional participation and market plumbing play a larger role in shaping price behavior. So perpetual futures increasingly anchor price discovery. Coinbase identifies perpetual futures as a central pillar of crypto market activity, noting that derivatives now account for the majority of trading volume across major venues. According to the firm, this has shifted the mechanics of price information toward positioning, funding rates, and liquidity conditions rather than relying solely on retail-driven momentum. The report states the leverage was sharply reduced following liquidation events in late 2025, particularly in derivatives markets. Coinbase characterizes that drawdown as a structural reset rather than a retreat, arguing that speculative excess was removed while participation in perpetual futures remained resilient. Duong and Basco write that the tighter margin practices and improved risk controls are contributing to markets that absorb shocks more efficiently, even as derivatives continue to dominate liquidity. So essentially, they're saying that the dynamic of what's driving the market is changing, and that makes sense with all the institutions coming in, a lot of new derivatives markets being launched by different folks, institutions themselves, as well as crypto native firms. Like Coinbase, they themselves launch perpetual futures, and I think they're saying that the more liquidity that comes in, the larger the infrastructure and the players, it's going to help dampen some of the liquidity shocks like what we saw in October, right? With the largest liquidation in the history of the market. Those things are not going to happen as frequently moving forward. They're going to be absorbed very easily. And now it's not to say volatility is going to be completely removed. Obviously not, right? I mean, we see volatility in the stock market, but it's not as volatile as crypto, right? Because the stock market has those things which I'm talking about, a lot of liquidity, a lot of players. So even if you have some sort of black swan event, there's a recovery pretty easily. Prediction markets, Coinbase says, are evolving from experimental products into more durable financial infrastructure. The firm points to rising notional volumes and deeper liquidity as signs that these markets are increasingly being used for information discovery and risk transfer. So I think this one should come as no surprise. We've seen lots of prediction markets being launched by different folks. And of course, Kalshi and Polymarket are leading the charge with their data being used for elections and much more. They said here, stablecoins and payments underpin real-world activity. So the final pillar of growth for 2026, Coinbase highlights, centers on stablecoins and payments, which the firm describes as crypto's most persistent source of real-world usage. Duong and Basco write that stablecoin transaction volumes continue to grow through settlement, cross-border transfers, and liquidity management rather than speculative trading. So this is also another one that's not a surprise here. And I do believe that once the Genius Act is fully implemented, because it's taking time for that to be put into place, and you have banks and these other folks launch their own stablecoins, the stablecoin market cap could easily cross $1 trillion, potentially, late 2026 or early 2027. I think that's certainly possible, especially with the dovetailing of the crypto market structure getting passed. It's just going to allow for people to issue stablecoins on more blockchains because you'll have clarity as to what blockchains you can use and much more. So, great predictions here. Some of this shouldn't come as no surprise, and all of it makes sense here. Okay, moving ahead, look at this. Marae Asset in talks to buy Korean crypto exchange Korbit in a $100 million deal. So the mergers and acquisitions, the company's going public, expansion, and much more continues, right? These are healthy signs of the market, guys, and will allow for more capital to come in. So Marae Asset Group is in talks to acquire Korbit, South Korea's fourth largest crypto exchange, in a deal valued at roughly 100 billion to 140 billion Korean won, or 70 million to 100 million dollars. The potential acquisition would be led by Marae Asset Consulting, a non-financial affiliate of the group, which has reportedly signed a memorandum of understanding with Korbit's major shareholders, according to a Sunday report from the Chosun Daily. Korbit is primarily owned by NXC and is a subsidiary of Simple Capital Futures, which together hold about 60.5% of the exchange. SK Square owns an additional 31.5% stake. So Korbit holds a full operating license and compliance infrastructure, which could make it an attractive entry point for a major financial group seeking regulated exposure to digital assets. So pretty big moves happening here, guys. And again, this is a sign of things to come. This asset class will only continue to grow. Right now, it doesn't feel that way. I know the price is down and everybody's feeling down, right? Oh, it sucks. We didn't get this blow off time, but I mean, look at the moves being made here. They are massive, building out the infrastructure, which will again allow more capital liquidity to come in, more big players. Really, the on-ramps are not being built for retail, but for institutional investors. Retail, it's pretty easy for them to get crypto now. I mean, you got ETFs, you got mainstream traditional finance platforms launching crypto trading and much more. It's not really retail. It is for institutional money. So what do you think is going to happen when they start putting big capital into this market, right? The valuations are going to skyrocket. Final news item here, Ethereum's Hegota upgrade slated for late 2026 as devs accelerate roadmap. So Ethereum continues to get major upgrades. It certainly needs it, right? As a layer one, it has great security, but obviously it's not great from a speed and fee standpoint. That's why you have so many layer twos. So let me give you the details here. Ethereum developers earlier this month agreed on the name and rough timing of the network's second major upgrade scheduled for 2026, settling on Hegota as the next milestone in the blockchain's development roadmap. Hegota will follow Glamsterdam, Ethereum's next major upgrade, which is currently expected to roll out in the first half of 2026. The decision reflects a relatively new approach to Ethereum development, with core contributors aiming to ship network changes more frequently rather than building or bundling large numbers of upgrades into releases that happen roughly once a year. So let's see how these all roll out, guys. But could the timing work out with some of the potential rallies that may be ahead? We shall see. It might help because one of the things we've seen historically, we need Ethereum to do really well, and a lot of altcoins are built on Ethereum as ERC20. And a lot of liquidity, if it hits Ethereum, then makes its way to the altcoin or the different altcoins. So this is something to watch how Ethereum performs. Because we've seen the pattern and the rotational liquidity from Bitcoin to ETH and then the rest of the altcoin markets and much more, small cap, large cap, mid cap, and so forth. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. If you appreciate this content, please support the podcast by subscribing to my free email newsletter. It is 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. Be sure to grab a copy. And check out my course at mycryptocourse.com. Folks, thank you so much for tuning in. I appreciate you all. Thank you for your support throughout the year 2025. As we wrap up the year, I'm wishing you all a happy, healthy, and prosperous 2026. I'll catch you in the next one.